People often assume that I enjoy chaos. They think I wait for disasters and profit from pain. That is not true. I do not enjoy chaos, but I understand that it is part of reality. Markets are not stable by nature. They are dynamic systems fueled by perception. What changes the world is not events themselves, but how we interpret them. That is the essence of reflexivity. When I invest, I am not analyzing only data or balance sheets. I am studying the collective psychology behind the data. Every number on a screen represents a belief, a story that investors are telling themselves. When those stories diverge too far from reality, tension builds, and that tension eventually snaps. That is when you get a crash or a bubble. The tragedy is that people only recognize the illusion after it breaks. I never believed in predicting the future. I believe in observing the present more accurately than others. When you see things clearly, opportunities appear where others see confusion. Most people lose money not because they lack intelligence, but because they cannot accept that the world changes faster than their opinions. They cling to yesterday's logic even as the ground shifts beneath them. I do not. I have trained myself to let go. I was born in Budapest in 1930. I came of age under Nazi occupation, living with the constant awareness that life could end at any moment. I survived by pretending to be someone else, by adapting faster than danger could find me. That experience taught me a lesson long before I had any money to invest. Reality is not fixed. It bends and twists according to our beliefs and our actions. That belief became the foundation of my philosophy, both in life and in markets. People often ask me, George, how did you know when to bet big? How did you know when to risk everything? The truth is, I never knew. I only observed. And I followed one rule, the one that saved me through every crisis, from the 1,970 seconds oil shock to the 2008 meltdown. When everyone believes something is certain, I look for the flaw in that certainty. That is my rule. It sounds simple, but it demands more than intelligence. It demands emotional courage. Because to apply it, you must stand apart from the crowd. You must risk being ridiculed, doubted, even hated. In 1992, I was certain of one thing, that everyone else was certain: the British government could defend the pound. The Bank of England was determined to keep its currency fixed within the European exchange rate mechanism. Politicians spoke confidently. The newspapers called it unshakable, but I saw something they refused to see. The mathematics didn't add up. To defend the pound, the Bank of England would have to raise interest rates to unbearable levels, levels that would crush their own economy. They were trapped by their own illusion. So I did what my rule demands. I bet against the illusion. I sold billions worth of pounds short. When the illusion broke, when the bank finally abandoned its defense, the pound collapsed, I made over $1 billion that day. But the money was not the point. The point was this: when the crowd believes something too deeply, that belief itself becomes a weakness. And those who can see through it calmly, rationally, will survive. I survived because I did not depend on certainty. I built systems designed to be wrong systems that could adapt. When my positions moved against me, I did not freeze. I re-examined them. I asked, has the reality changed? Or have I simply misread it? If I was wrong, I closed the trade immediately. No hesitation. That flexibility, the willingness to change my mind, has made me more money than any prediction ever could. During the Asian financial crisis, I saw economies collapse under the weight of debt and speculation. entire nations were paralyzed by fear. I realized then that even at a global scale, reflexivity rules. Perception creates policy, and policy shapes perception. That is why I never trusted the notion of equilibrium. The market is not a machine that seeks balance. It is an organism constantly overreacting to itself. There is a dangerous illusion in modern finance, the illusion of control. People build models, algorithms, theories, and convince themselves that they understand risk. But no model can predict human behavior. It can only describe it after the fact. That is why crashes will always return. Each generation believes it has mastered uncertainty, and each generation learns that uncertainty cannot be mastered, only respected. My greatest advantage has never been intelligence. It has been the willingness to change. When reality conflicts with my opinion, I change my opinion. Most people do the opposite. They distort reality to fit their opinion. That simple difference explains decades of survival. I often reflect on the irony that my success came not from certainty, but from doubt. I have doubted everything: governments, institutions, currencies, and most of all, myself. That doubt has saved me more times than knowledge ever could. Every successful trade I have ever made began long before the market moved. It began with preparation, not the kind you see in textbooks, but mental preparation. I trained myself to expect disorder. I assume that whatever can go wrong eventually will. Most people enter markets with hope. I enter with suspicion. That mindset has saved me countless times. Hope is not a strategy, awareness is. When I sense calm spreading too perfectly across markets, I become uneasy. Stability in finance is the most dangerous illusion of all. It breeds complacency. Prices rise, volatility falls, people grow confident, leverage increases, and soon the entire system rests on a fragile foundation of belief. I have seen this pattern repeat my entire life. The illusion of stability is the prelude to every collapse. The moment everyone stops questioning risk, the seeds of destruction are already planted. During those periods of calm, I study behavior. I look at what people stop talking about. In the early stages of a bubble, doubt disappears. That silence tells me more than numbers ever could. When skepticism vanishes, the herd is asleep, and that is when I begin to position myself quietly for the reversal. I never announce it, I never boast about it. I act when others are least prepared to think. Reflexivity teaches that perception and reality feed each other in a loop. If investors believe an asset is strong, they buy it, and that buying makes it stronger. But when the first cracks appear, perception turns, and strength becomes fragility overnight. The same feedback loop that builds wealth destroys it. My task is to recognize where in that loop we are. Am I looking at a market still feeding on optimism, or one already choking on it? I trust my own discomfort more than I trust consensus. When a position feels too easy, too comfortable, I examine it closely. Comfort in markets is often the disguise of danger. It means I am aligned with the herd, and the herd never notices the cliff until it falls. The most profitable trades I have ever made felt the most uncomfortable when I entered them. Doubt, I have learned, is not a weakness, it is a compass pointing to hidden truth. There is a rhythm to human behavior that repeats through centuries. People chase certainty until it vanishes, then run towards safety until opportunity returns. It is a pendulum swinging between greed and fear. My one investing rule lives in the space between those extremes. When everyone believes in endless growth, I ask what happens if growth stops. When everyone believes nothing will recover, I ask what happens if it does. The answers are rarely obvious, but they are always profitable. Understanding reflexivity means understanding that markets are living organisms. They breathe, expand, contract, and overreact. Every boom contains the next bust. Every bust, the next boom. That cycle is not a flaw. It is the natural rhythm of perception correcting itself. You cannot stop it, you can only adapt to it. My advantage has been that I accepted this truth instead of fighting it. But before every crisis, I feel an uneasiness that numbers cannot capture. It is not mystical, it is pattern recognition. When confidence feels rehearsed, when optimism feels forced, I know the tide is turning. That is when I begin to reduce risk, to protect liquidity, to prepare for volatility. I never try to time the exact top or bottom. Precision is for ego, survival is for real investors. I remember the months before the 2008 crisis. The world was intoxicated with leverage. Real estate prices rose endlessly, and financial institutions created delusions upon illusions, derivatives built on fantasies of perpetual appreciation. To me, it felt eerily silent. No one doubted anything. That silence screamed louder than any alarm. The reflexive loop had reached its breaking point. Belief had replaced analysis. That is when I positioned myself for collapse. When it came, I was ready. Some call me a speculator, others a manipulator. They misunderstand what speculation means. To speculate is to observe what others ignore. It is not manipulation, it is anticipation. I never create crises, I merely see them forming. When the Bank of England fell, it was not because of me, it was because the system was unsustainable. My role was merely to recognize the imbalance. Markets punish denial. I just accepted reality sooner than others did. Every market movement begins with a story. These stories are not told in headlines. They are told in whispers, between traders, in the confidence of investors, in the collective narrative that says, this time things are different. The words change, but the structure never does. Each cycle convinces a new generation that the old rules no longer apply. And each time, reality reasserts itself with brutal precision. Uncertainty is not comfortable, but it is necessary. Living with uncertainty is like standing in the middle of the ocean. There is no solid ground, only movement. Most people cannot bear that feeling for long. They crave something firm to hold onto, even if it is an illusion. I have learned to be at peace with the waves. They are not enemies. They are the natural rhythm of existence. Emotional detachment does not mean indifference. I feel the same fear as everyone else when prices fall, when the news is catastrophic, when my trades turn red. But I have trained myself to let those feelings pass through me, not control me. The market is a mirror. It reflects our psychology. When you panic, the market senses it and amplifies it. When you stay calm, the market eventually bends back toward you. It rewards those who remain composed while others are losing their minds. I built that discipline through failure, not success. Success teaches you very little. It makes you comfortable, overconfident. Failure strips away illusion. Every time I lost, I learned how fragile my beliefs were. I learned that humility is not a virtue. It is a survival mechanism. Ego is expensive. Humility is profitable. Many investors treat their portfolio as an extension of their identity. They defend it, justify it, fall in love with it. I have never understood that. My investments are hypotheses, not trophies. They are ideas waiting to be disproven. When the evidence changes, I let them go. That is why I sleep well during crashes. I do not cling to what is falling. I often think of the young traders who enter the markets full of excitement. They believe they will outsmart everyone, find the secret, beat the system. I wish I could tell them that there is no secret, only awareness. You do not beat the market. You align with its cycles of illusion and correction. The sooner you accept your own fallibility, the sooner you begin to see clearly. Fallibility is the foundation of my philosophy. I know that I can be wrong, and that knowledge liberates me. It keeps me from the arrogance that destroys great fortunes. The moment you think you are invincible, you are already exposed. I never build my strategy on the assumption that I am right. I build it so that I can survive being wrong. Survival is the real measure of intelligence in markets. There were times in my life when the psychological toll was heavy. The pressure of managing billions, the constant noise, the endless uncertainty it wears on the mind. I used to feel physical pain in my back when I held positions that were misaligned with reality. My body would tell me before my intellect did. I learned to listen to that. It was my subconscious warning me that something was wrong. Eventually, I came to trust intuition as much as analysis. Both are forms of observation, one rational, one instinctive. People often misunderstand intuition. They think it is mystical. It is not. It is the accumulation of countless observations stored in the subconscious, emerging as a feeling. When you spend decades watching markets, your brain recognizes patterns faster than logic can explain them. The key is to respect those signals, not to dismiss them. Intuition saved me from disaster more times than models ever did. But intuition only works when the mind is quiet. You cannot hear it through the noise of greed and fear. That is why I value solitude.
I spend long periods alone, reflecting, thinking, watching. In silence, patterns reveal themselves. Most investors are too busy reacting. They drown in information and miss the meaning beneath it.
The market rewards clarity, not activity. Over the years, I have realized that markets are not external forces. They are reflections of ourselves. The same impulses that create financial bubbles also create wars, revolutions, and political shifts. Human beings struggle with complexity. We simplify reality into stories that make us feel safe. But those stories, when shared by millions, become dangerous illusions. As an investor, I study those illusions not with judgment, but with curiosity. They reveal where the next distortion and the next opportunity will appear. Crashes are moments of truth. They strip away pretense and expose the raw human condition. In those times, I feel oddly calm, almost detached. It is not joy, it is recognition. The market is cleansing itself. Illusions are dying. What remains afterward is more real, more honest. That honesty creates the foundation for the next cycle of belief. The pattern never ends. If there is one piece of advice I would give to anyone facing uncertainty in markets or in life, it is this: accept that you will never have complete knowledge. Once you make peace with that, you become free. Most suffering comes from the illusion that we must know, that we must control. But the truth is, we control nothing except our response. That is where real power lies, in the ability to remain rational while others are drowning in emotion. I have lived long enough to see cycles rise and fall, to watch students become masters and masters become relics. The market is the great equalizer. It erases arrogance with time. Uh, what remains after all the noise and speculation is the discipline of awareness, the willingness to question, to doubt, to adapt. That is the essence of survival in markets and in life. Uh, so when people ask me for the one investing rule that saved me during crashes, I tell them this: never trust the crowd's conviction more than your own doubt. The crowd can be wrong for a long time, but never forever. The moment you begin to think independently, truly independently, you separate yourself from the cycle of destruction. You stop being a victim of reflexivity and start becoming its master, because in the end, it was never luck, never timing, never genius that saved me. It was doubt disciplined, relentless doubt, the kind that looks at chaos and sees not threat, but truth. That is the one rule that has never failed me, and it never will.